Hello traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for October 22nd, 2017. Hope you guys are having a great weekend, and we have a lot to talk about today. Actually, there was so much that happened last week and so much that's going to happen this next week. We're going to get into it. But before I do, I want to make sure that if you haven't signed up for ForexAnalytix, make sure you do so. And once you do that, download the app from the Google Play Store or the App Store for your iOS, so you can get everything on your mobile device. You can get notified when support and resistance levels are breached, if we have a new update, if there's a new pattern in play where we see a developing trade. You can get that right on your mobile app, and it'll pop out at your notifications. So that's always awesome. And then also, you know, if you haven't done it, it's $1 for 10 days just to try it out. So click here and this is what you see. All right, now before we get into what's going on next week, let's talk a little bit about last week. So last week, and by the way, I guess I should go back really quick. If you didn't look at the blog, and you can get to our blog right here, and if you haven't read the one about the yen, what the yen crosses might do, you might want to click on here. If you didn't get the chance to read about the New Zealand dollar, you might want to click right there on the blog. These are free. But I really wanted to talk about the Kiwi. You know, the Kiwi actually closed at really weak levels, very low levels, and very critical levels as well. And I think one of the only reasons why the Kiwi hasn't broken down yet is that traders aren't 100% sure what the dollar is going to do, and that's obviously a key component if you're taking a look at the Kiwi. But with the change of prime ministers in New Zealand, it's really a new day in New Zealand in a lot of respects. But the new government coming in, they really are. That was probably the worst case scenario for bulls. I mean, the New Zealand bulls, this is not what they wanted. They didn't want a coalition of two different parties that are going to have the majority to push along legislation that really it might hamper some growth in Kiwi, or maybe shift it from, you know, the elite to more of the middle class. And a lot of traders and a lot of analysts believe that it's going to be pretty New Zealand negative. And you can see by the response the last 2 days of the week how the Kiwi really succumbed under some pressure. And we're obviously testing some pretty key support here. This is a weekly chart. I think that a move down to 66 cents is not out of the question. That's 127% extension of the move of this year. And obviously, if we break below 68 cents, then 66 cents is just below that. And that's going to be where a multi-year trend line comes into play. I really think that if you look at the Kiwi, and it's not just the New Zealand dollar, it's looking at a lot of New Zealand currencies. Like let's go over to the New Zealand yen, for example. New Zealand yen's faced with a very similar situation where we're testing multi-year trend lines here, or at least a year-long trend line here in the New Zealand yen. And we'll talk about Japan here in just a moment. But you take a look at some of these other currencies like the Aussie New Zealand. You know, obviously we're breaking out of this is a multi-year triangle, guys. This is from 2012. 2012 all the way to right now. I mean, you're talking a 5-6 year consolidation pattern being broken. So you know, a lot of weakness in the Kiwi around the FX market, and you can read all about that on the blog. But I guess the point I wanted to make here is, since I don't know what is going to happen with the dollar, and let's talk about the dollar index right now. I'm not too sure what's going to happen with the dollar from where we stand in this big inverted head and shoulder pattern that you can see here. You know, I think it's questionable, and I think that's why the New Zealand dollar specifically is having some issues. But if this dollar does reverse, remember we had a false breakout up here, we had a false breakdown down here. If the dollar index you know, starts to complete this inverted head and shoulder pattern, you can see a shoulder, head, shoulder, then we have another smaller head and shoulder pattern there. The neckline's right through there with that blue line that's drawn. You know, we break through those highs, and the dollar index is going to be maybe up at 97, maybe up at 98. And there's a lot of catalysts that can cause that, especially with, you know, the Fed continuing to raise rates, and with a potential new Fed governor coming in, the dollar could rally. That could be the catalyst that really drives the Kiwi lower. So the New Zealand dollar back below or down towards that 66-cent level. So anyway, that was last week regarding the New Zealand. But let's talk about like this weekend. So this weekend right now, Japan has an election, and you know, a lot of people look at this election as it's more of a legacy type of election. And, you know, Prime Minister Abe, he wants to be the, you know, prime minister, the longest standing prime minister since, I want to say World War II. But a lot of people say he's just trying to strengthen his power to really, you know, carry out his term till 2021. Anyway, I really think that, that it's going to be because it is a snap election. It should be no problem for Prime Minister Abe and his, you know, for him to continue on. But there's always that risk, you know, and the risk would be that that in the currency market that the yen actually tries to reverse its course. But right now the yen is fairly weak. And we see the dollar yen pressing towards 114. But I think it's pretty much baked in. So after this weekend, or on Sunday afternoon, Monday morning for some of you in Asia, if the dollar yen is trading up towards 114, that's going to be pretty major resistance, as you can see here. It's a big triangle that is obviously, you know, going to test the upper end of this triangle. And personally, I might be looking for a short on the dollar yen up there, or maybe some other yen pairs. I mean, if you look at, let me take you over to the euro yen, for example, and then you got to factor in the ECB this weekend, or this week. It is this weekend. Talking this week, you have the euro yen that's got this 618 retracement on a, you know, this is a multi-year range. So on this bounce, you know, we're at the 618, which is major at 134.30 now. And you got other yen pairs too that you know might get a bounce. Like here's the New Zealand yen. We're at obviously key support. We might get a little bit of a bounce from that support. Aussie yen too. We're already pushing. You know, the underside of this trend line, we have a minor 618 that comes into play right here around 89.15 yen, which is just above the highs. Like I said, after the election, if the yen is weak following the election, I don't know if that. I think it might be more buy the rumor, sell the news, or in this case it would be sell the rumor, buy the news. So the yen may strengthen. You might see these yen pairs roll back over after Sunday, Monday. So that's something I'll be watching for at the open when the FX market does open. Now let's talk about the euro for a moment, and this clearly displays the head and shoulder pattern that we're dealing with, and the inverted head and shoulder pattern of the dollar. Now, the ECB is meeting this week, along with the Bank of Canada, by the way, and we're going to talk about the Bank of Canada here in just a minute as well. But the ECB is meeting this week, and the problem with the euro dollar is we're developing this, you know, head and shoulder pattern. Now 119 is key resistance, support is 116.75. All right, that's it. It's the shoulder that's being formed. You can see it right here. All right, the neckline and the shoulder. A break above 119 is extremely bullish for the euro dollar, and below 116.75 is extremely bearish, or should have that bearish continuation, you know, maybe down to 114. So what could cause that? Well, you have the ECB that's meeting this week, and they're widely expected right now to run finish off their 70 billion US dollars. I think it's about 60 billion euros in asset purchases through the end of the year, and then they're expected to start tapering. Now, whether or not they announce it, you know, the market's looking for them to announce that they're going to trim their purchases maybe to 40 billion euros, or maybe, you know, possibly something less. And if it's something less, that would be bullish for the euro. Then the euro would be, you know, above 119. And if it's maybe around, you know, 40 or 50 billion euros as expected, then the market might look at that as the, you know, ECB is still rather dovish, and they're slowly tapering, and then you might get the euro coming in. So I think, you know, if you go back to the dollar and you look at that inverted head and shoulder pattern in the dollar index, or the euro dollar head and shoulder pattern, it really probably has a lot to do with the euro this week, and then over the next 2 weeks has more to do with the dollar as President Trump looks to select a new Fed governor. All right, but then again, we could get that announcement fairly early from President Trump, which could coincide with this move in the euro dollar and make it really wicked. So there's a lot coming up this next week. And last but not least, I want to talk about the Bank of Canada. The Bank of Canada is also meeting on Wednesday of this week. Now, we have to look at the Canadian, because the Canadian, remember, and even if you saw the COT data this week, the market is extremely long Canadian dollars. That means the market is expecting a weak US dollar Canadian. The problem is that we're breaking out to the upside. Okay, we had some weak Canadian data that is causing a reversal here. Then on top of that, if you have the Bank of Canada that doesn't signal more rate hikes or rate hikes going into 2018, and they come out a little dovish because consumer spending and inflation came in a little weak this last week, oh man, we can end up trading up at 127, 128, maybe even up as high as 129 and change going into this next week. And that is something that and I have no Canadian exposure personally, but I'm looking at this as this could be a really big squeeze. And then you throw some dollar strength on top of that and Canadian weakness, then you have a dollar Canadian that becomes much stronger in the week ahead. And that is something that I think everybody should be paying attention to. All right, guys and gals, hey, listen, if you found this video entertaining, honk, 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 or maybe, just very informative, make sure you click that like button at the very bottom of the YouTube video. That encourages us to continue to do these each and every week. And also share it if you can. And also subscribe to this channel, because if you subscribe to this channel, you'll never miss all the great interviews that Dale Pinkert, our esteemed host for the FACE webinar, who he does it every day, and it's free. He brings in great interviews. You won't miss any of those. If you subscribe, you can see all of our live training and analysis that we do each and every day. We do that for an hour, if not an hour and a half, every single morning at 7 a.m. Eastern. So make sure you subscribe to our channel, like this video, and guys and gals, most importantly, enjoy your family, enjoy your friends, and enjoy your weekend. And have a great trading week next week. My name is Blake Morrow with ForexAnalytix. Talk to you soon.